Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 18th of April, starting off with the FTSE 100, where it's all about 78.80. Apparently, that was the old support before we had the rug pull at the beginning of the week, and now that is resistance. End of day close above 78.80. You're heading up to 80.80, which is that December resistance line projection. On the downside, currently not expecting anything worse than 77.70 in the 50-day moving average. You can see that the RSI is now pushed back above the neutral 50 level, which gives us some hope for the rest of the week. Moving on to the DAX, which has had the rug pulled as well, probably some ways worse than the FTSE, but here we're bouncing off the 50-day line, 17,700, which is or was one of the scenarios we were hoping for. We need to break that resistance line there from the beginning of the month, around 18,000, to get us back on track for a retest of 18,500. Perhaps by the end of next month. On the downside, the worst probably at the moment would be the March support there, 17,600, which obviously is not much lower than the 50-day moving average. Moving on to the Dow, and here the pain continues. It seems as though this market really does want to erase all the gains of 2024. That would need to take it back to 37,000. I think we have to factor that in the way things are going. Early and end of day close back above the old February neckline support, 38,000, would then give us the chance of rebounding back to the 50-day line, 38,800. And so on the plus point, we have the market now near RSI 30, and as you can see previously, the last times we were near RSI 30, the market bounced quite well, especially obviously at the end of October. On to Bitcoin, and here I suppose as we get nearer to the halving, nerves are jangling. What we didn't want to see was a break below 60,000, which we had temporarily yesterday, 59,800. We were factoring in 57,000, 58,000, just because a lot of stop losses would be just below 60,000. And obviously the market would be keen to take them out. So can't sort of rule out another move down towards that 57, 58,000 area. Ahead of this market regrouping and maybe heading up to the 50-day line, 67,000 or so by the end of this month. Moving on to gold, which has been the star performer of late, and even here though a little bit tired. This very steep rising trend channel has its floor around 2360, and so it would be quite a lot to expect the market to remain above that. But if we do, then we could be heading towards the top of the channel. And that's currently pointing to a target towards, well, 2480 plus, maybe even up to 2510 by the end of next month, while we remain above that mid 2300s zone. Moving along to the stocks and starting off with Anglo Asian, which has a nice rising trend channel base there from back in July last year. Also got this V-shaped bull flag, as I call it, just about a break, hopefully at 68p plus. Above that, looking for 90 pence by the end of next month. I suppose mirroring the rally that we saw back in November. The difference here, though, is that we're on the right side of the 200-day line at 61 pence, and the longer we stay above that, the better this situation looks. On to Byotrol, which apparently is leaving the stock market, but in the meantime, bouncing along, maybe people covering their shorts, etc. Interesting that we found support again at the initial April levels. That's 7.5, and the last call here was that a break of 0.1 could take us back up to 0.25 or 0.2 to 0.25. It looks as though we might get that again, but obviously this is not for widows and orphans. And the other point to note is we really don't want to see the shares now on the wrong side of 0.1 pence. Moving on to Challenger, which has been in a decent progression since October. The rising trend channel there heading for the 0.17 area, and that's what we're looking for, hopefully by the end of this month. Best case would be up to 0.24 at the upper parallel of that rising trend channel point by the end of next month, but that all of that dependent on remaining above the 50-day line at 0.13, and obviously we might just fall back now. On to critical metals, which has been battered and bruised, but looks as though it's fighting back now. You can see that we've got this rising trend channel base, top of the channel there up to 6.5, and that's what we're looking for by the end of this month, while we remain on the right side of 4.8 pence recent support. I haven't looked at 88 Energy for a long time, and You can see why on the daily chart. Gap down there last week, and basically the situation now is we're hoping that there is a support line coming in. It would look like the line I'm just about to configure at the moment. So basically 0.2, the line in the sand, and above that maybe the shares could just about fill the gap up to 0.24, 0.25 over the next few days, but that at the moment is a best case scenario for that share. Moving on to Galileo, and here we're still waiting for the stock to break that resistance line there from back at the end of 2022. Line in the sand here is at 1.2 pence. If we can finally break that, we will be looking for a breakout to 1.6, 1.7 pence over the following month or so. So maybe by the end of next month, but obviously this has been a slow situation. We really need to stay on the right side of the 1 pence level. Next up, Manolete or Manolete, depending on how you want to pronounce it. Here we've had a bear trap gap reversal, gapping through the 50-day moving average at 129 pence. Looking for the top of that broadening triangle there from September as high as £1.87, perhaps as soon as the end of next month. But the key here is remaining above that 50-day line. Moving on to Novacyt, which I've covered quite a lot in the recent past. Very volatile situation, and what's exciting now is that we've not only broken the neckline resistance of 55 pence, which we did early in the week, we've gapped up through we've gapped up to new 2024 highs, the old peak around 64 pence, above 64, looking for up to 78 over the next few sessions, and obviously then we could take out the 1-year resistance in the mid-80s. Particularly positive here on the basis that both the 50 and 200-day lines are both rising now, and that means we're probably like 2 or 3 weeks away from a golden cross. The run up to a golden cross tends to be the strongest part of the cycle, and for Novacyt it already has been. If you're close to the stock, then really you want to see an end-of-day close back below that gap floor, overnight gap floor at 61 pence. Another biotech doing well at the moment, which is unusual, is Oncimmune, and here nearly up to our target of 34 pence. Looking for that while we're above the latest gap at 25 pence, and hopefully we get to 34 or 35 pence by the end of this month. As in the case of Novacyt, both the 50 and 200-day lines are both rising, which is very positive. On to clickbait stock, Premier African, and here the stock defies all attempts to capture its price action. The situation now is that we do have that uptrend line still from the end of last year near the 0.18 level. Above that, looking for the 50-day moving average at 0.27 as a best case scenario over the next 2 to 3 weeks. Obviously fundraise permitting on that. On to a stock which is rehabilitating itself quite well at the moment, Reabold Resources. Here we broke the 50-day line 0.07, then we broke that line of resistance from November just under 0.08, and the longer we're above that line, the greater the chance of a move up to 0.11 by the end of this month, and hopefully up to 0.15 by the end of next month. On to the last two, one stock which has been a bull batterer of over the recent past. Here you can see Sareum has delivered a gap close buy signal, the gap down there back at the end of March, and so above the 15 pence level. Looking for the shares to not only hit the 50-day line, and that's at 25 pence, but also fill the gap up to 27 pence from March. Hopefully by the end of next month we could be up to 45 pence as a best case scenario. I suppose the most likely scenario here is that we would fill the gap and then fall, but you never know. Finish off with Thor Explorations, and here the company doing most things right at the moment. We've got good consolidation here at old March resistance at 14 pence. Above that, looking for up to 17 3/4 by the end of this month, hopefully up to 21 pence by the end of next month at the top of that, well, the upper parallel of that broadening triangle from back in September. But the key here is holding the 14 pence level. That's it from me today. More updates tomorrow.